The Reserve Bank has swung harder than Lance Cairns at the MCG in 1983.
It's gone again. It's a massive hit.
The OCR is heading for 2.5%. The Kiwi dollar's been smacked like a Warriors fan, and suddenly the property market's back in play. Sheep money is coming, whether you're ready or not. To explain whether this is salvation or stupidity, we've got Kiwibank's chief economist, Jarrod Kerr. He's next.
Financial freedom faster. Financial freedom faster.
Now, if you actually fancy making money instead of sitting there sulking while your neighbour gets rich and you keep refreshing Trade Me like some tragic hobby, hit the subscribe button. More Kiwis are choosing to get their property brains from this YouTube show than anywhere else in 2025. Be a trendsetter before your mates find out. Jarrod, thanks for coming on the show again. Let's not muck around. Is this OCR cut basically the ref's whistle kicking off another property boom?
Oh, I don't know about a boom, but it's certainly going to help. That's for sure. We've had a couple of years where the property market has underperformed. The rate hikes that the Reserve Bank delivered were pretty heavy-handed, and now they're being forced to unwind all of that. So we're looking at the trajectory for interest rates, and we're more optimistic that things will turn around over the coming year.
Jarrod, the Kiwi dollar's been knocked around. Who wins and who loses in this?
Yeah, I mean, the Kiwi dollar's fallen a little bit, which is helpful for our exporters, particularly those that are exporting into the United States and facing a 15% tariff. So the currency is doing what it's supposed to be doing in a situation like this, and it's softening, which helps farmers and wine makers, which is good. Doesn't help importers, however, and they're coming into the Christmas season, and they're reluctant to take on stock from what we've seen. They're wary that it might be another Christmas which is weak. So if that's the case, that's not good for them. And the weaker Kiwi dollar obviously makes importing goods, even more expensive. So, yeah, some people enjoy a weak Kiwi dollar. Some people don't.
Yes, it feels as though it's a little cheaper buying petrol at the moment. And with the weak Kiwi dollar, we know what happens there, and that's inflationary.
Yeah, it doesn't help, does it? So, our imports get a little bit more expensive when the Kiwi drops. We might see that showing up at the petrol station, as you say.
How will the Reserve Bank react if, say, the CPI next month is at 3.5%?
They will look. Well, they should look through it. There's some inflationary pressure coming through, which is temporary, particularly the spike in food prices. You wouldn't want to be, setting monetary policy on what is a near-term temporary spike. We think that the inflation rate will sort of peak at about 3%, which is not helpful levels, but it's certainly not the 7.3 that we had a couple of years ago. And we actually think that the risks to inflation are to the downside, actually. We think inflation falls below 2% next year.
All right. Well, with mortgage rates heading in the 4s again, does that make housing the only game really for Kiwi investors?
Oh, no, I don't think so. I think there's plenty of opportunities presenting themselves out there at the moment for the shrewd investors, those that can invest through the cycle. I think housing will come back. It needs to come back. But I think that, there are a lot of investors out there looking at the Kiwi economy right now going, it's been through 2 years of really tough times. There are opportunities out there for those that can, look to next year and beyond.
What are you forecasting house prices to rise to next year?
We're thinking sort of around that 5% level, which is a bit of a spike from what we've seen this year. That forecast, unfortunately, has just been pushed out. We thought we'd get some price gains this year in 2025, but it does look like that's been postponed a little bit. We are just waiting for those interest rates to get to a level that actually entices people, and I don't think we've seen that until very recently.
The issue is, though, if you're right with your 5% forecast and inflation is, say, 3.5%, what are we looking at? A real return of 1.5% in house prices. You may as well keep your money in the bank.
Yeah, I guess some people would take that stance. I think it's a market that has been hit particularly hard. So even, within that 5% number that we're talking about, there'll be some regions that'll obviously outperform that, others that won't. There are opportunities within that market, within that space. But yeah, I mean, as you say, a 1.5% gain, you're not sort of shooting the lights out across the board. But within that, there'll be some areas that'll do reasonably well.
With the OCR dropping and the forecast of perhaps going 2.5%, take the investor's hat off for a second. Is this also a case of trying to rescue business in this country?
Oh, absolutely, 100%. I think that's more the point. We need to get business lending rates lower, not only to provide relief for businesses that have debt, but to encourage others to invest. The missing piece of the puzzle at the moment is business investment. Businesses have been shell shocked with the recession over the last couple of years. They're disappointed. They're frustrated at the moment. Getting interest rates lower will help. And we need to get interest rates to a level that actually engages and gets people looking to invest again. I don't quite think we're there yet. But once we are there, that's precisely what we're looking at into next year as being the key turning point.
What do we need to have happen to see results? Confidence is obviously the elephant in the room.
Yeah. You've touched on it, right? People have to be confident again. They were shell shocked last year, and they were sitting there saying, "Well, we need to survive till 25." Well, here we are. Most of our way through 25, and things haven't gotten better. Things are still very soft. So businesses, are actually quite frustrated and disappointed that things haven't turned around in 2025 like we kind of hoped. And they're looking to next year with, some concern that things, won't bounce in an election year. So, yeah, we really need to get business confidence back. And unfortunately, that I think takes, the economy rebounding. So it's a bit of a chicken and the egg thing at the moment. We need activity to boost confidence and fuel more activity.
What historically has restored confidence?
The economy itself. You go through bad periods. You go through recessions like the one that we're still going through. To be fair, interest rates get cut to a level that just ignites activity, and that then fuels confidence, which fuels more activity. And that's kind of what we need at the moment. We need something to sort of snap us out of the depressed thoughts that we're having at the moment.
Yeah, but we've got a right-wing government at the moment. And I suppose if you answered this question correctly, that you'd be Christopher Luxon and not the chief economist of Kiwibank. But they have to do something. That's part of the government. They've got to lead us out of the recession. And historically, this has gone on far longer than what's going on in the rest of the world. What are we doing wrong? What is the government doing wrong?
Yeah, I think there's room for the government to do more, for sure. Absolutely. Particularly on infrastructure investment. I think they get it. They're saying the right things, but we need to see, I think, bolder moves. We need to see, larger infrastructure projects being announced and put into the pipeline.
Really hard when they've got
Best
no
way
money.
to get out of a recession is to build your way out of it, right?
Yeah, but really hard when you've got no money like this government, right?
Well, they do have money. There's an OPEX, which is your kind of like your spending and your revenue, and that's very difficult for the government at the moment because revenue is not good in a recession. Your corporate tax takes lower than it should be, your GST, your income tax, everything that you receive as a government is on the lighter side, and you're trying to rein in spending. Well, reining in spending actually hurts the economic recovery. But then there's capex, and it's the capex which is the bit which is really hard to deliver. That's the bit that's going to make the economy harder, faster, and larger in the future. And it's that capex, it's that spending where, yes, you take on a bit of debt as a government, but you tackle the infrastructure deficit, and that's the more meaningful, longer-term growth aspirations we need.
So we're 12 months out from an election. When are we likely to see this turn for the government? I mean, with the economy, historically.
I would expect them to be doing what they can now, right? They know that they're running into an election year next year. They know that they've been in government for long enough now that people are starting to see, starting to say, well, what have you delivered? It's a very, very short runway, these 3 yearly cycles. I think it's way too short to expect a government to get up and running and deliver stuff within 2 years effectively, and then they go into campaign mode next year, which, it's unfortunate, but, I would expect them to be looking to, year-end budget update as being a key platform for them to jump into 2026 on a more positive note.
So if you watch this today and want to hear or read more of what Jarrod has to say, and clearly he knows his stuff, where do we get your reports, Jarrod?
You can jump onto the Kiwibank website, just search where's the Economist stuff under the business section, sign up. You can get our emails, or more importantly, watch our podcast, which comes out every Tuesday, called Markets, Mystics and Mayhem.
I would promote it, but we're about 10 times bigger than you, 100 times bigger than you. You need to come onto our podcast rather than going on the Kiwibank podcast. That's like giants and midgets. So you need to be on our podcast a little bit more, Jarrod. We promote your stuff better than the Kiwibank stuff.
No, agreed.
Jarrod Kerr, Chief Economist of Kiwibank, thank you once again for your time.
Pleasure. Thanks for having me on.